Hi, everyone, and welcome. I am Nora Paxson, executive coach, leadership strategist, and partner to CEOs and senior leader who wants to elevate how they think, decide, and lead in complex environments. Today, I have the pleasure of speaking with someone who embodies disciplined thinking and strategic insight, Jim Osman, founder of the Edge Group and global authority in special situations and spin-off research. For more than 2 decades, Jim has helped institutional investors uncover structural alpha, the kind of overlooked value most people miss because they're focused on noise rather than signals. His work has been featured in Forbes, CNBC, and Barron's, and his philosophy is refreshingly clear. You don't beat the market by being louder, you beat the market by thinking differently. So his new book, Price Catalyst, is a masterclass in spotting triggers that move markets long before the crowd catches on. Jim, I'm thrilled to have you here. Welcome.
Thank you, Nora. Thanks for having me.
So let's start at the beginning. Jim, what originally drew you into special situation and catalyst-driven investing?
Well, sadly, I've been around too long, and I've always been fascinated by what everyone else ignores, because the real value is not just looking at the things that everybody looks at. So early in my career, I saw our markets chase headlines and consensus, and actually not much has changed. But real value often hides in the transitions of companies, the spin-offs, the restructurings, the management shifts. They aren't just corporate events, they're moments where there is real price discovery. And that's where inefficiency lives. So once I realized that change, not comfort, drives returns, I sort of never look back.
So at what point, Jim, did you realize that these overlooked triggers could systematically outperform traditional valuation-only approaches?
Well, I think if you're as old as I am, you might remember 2008, 2009, where everything was breaking. There was a huge downturn in the stock market. I think it was down about 40% at worst. And I noticed companies quietly unlocking value despite the chaos. And spin-offs in particularly, and spin-offs just for the viewership, is where a company breaks up into different parts. There were a lot of companies where, and if anyone remembers that period, financial companies were like dirt, right? Everyone was losing money, and the big spin-offs were financial companies. Companies just wanted to get rid of these things at any cost. So these spin-offs, in fact, behaved a little bit differently. Now, there were smaller, focused companies, management owned, and over time, and data confirmed what intuition already told me, that structure creates opportunity. So the dislocation at that point where companies were just spun off to the market because companies just want rid of them, really were some of the best performing stocks post that period. So once you understand how markets misprice change because they fear it, you have a repeatable system for finding alpha that others can't see.
Okay, right. Thank you. I love that. So in your book, Jim, you point out that the most investor obsess over valuation and miss the catalyst. So what's the biggest misconception that you can share with our audience about how value is actually created in markets?
Well, I think that this is where I try and teach. I go around, and we're talking previously about me going around to a lot of the schools because, they're enforced. All the financial students these days and financial analysts and the majority of them, let's say, the biggest misconception is value is static. It's something you can calculate in a spreadsheet, right? It's like, what's the DCF? What's the valuation? Like, yeah, it's kind of part of the plan. It's kind of part of the investment, but it's not everything. Value is revealed through change. You can have the perfect model, but if you miss the moment when perception shifts, the catalyst, you miss the return. So most investors stop at cheap, and that's why they can hold cheap, and it gets cheaper. But in my world, I like to go further and ask, well, what makes the market realize it's cheap? Where the edge actually lives. Now, if you wind this back a little bit, and I'll give you another example in a minute, but let's put it wider. When back in 2000, right, you had like the GMEs of the world, the GameStops, the AMC theaters. These stocks were like worthless, but then the perception was the perception changed, right? No one wanted these stocks, but the perception changed in the fact that the normal investor could take control over the big investor, and the stocks run. So at that before that point, they were nothing, but the perception changed there. So the catalyst was the actual perception of the stocks. So that was kind of interesting. So, but I can give you
Yeah.
certainly more examples as well from that.
Yeah. Love that. And I know I say edge is not found by following the herd. It's found by questioning the assumption the herd accepts blindly. So thank you for that. Um, you wrote that investor needs to think beyond numbers and to anticipate triggers. So what mental models or habits you help someone build that basically level the pattern of recognition?
Okay, let me just give you another example because I want to give you another example because I
Yeah.
thought of another one which
Ah,
before I answer that question, if you don't mind, Nora, because
yeah, no.
there's GE is a company that everybody knows. Now, if you look at my Forbes blog, and I share so much stuff on my Forbes blog, we followed that down. That was a perfect case of through the 80s, through the 90s, through Jack Welch. This is the greatest. He's got the greatest system. He was making money, and then the market stopped. Right, the market stopped, and then G went into free fall, and it went down. It went down. For years, it was written off as a legacy industrial dinosaur. So, but when Larry Culp came along and started restructuring, we saw a breakup coming. And long before even Wall Street priced it in. And then they announced a breakup. 400% return in 2, 3 years post the GEC breakup. Some of the best performing names out there. But this is stuff where people won't naturally know, but actually it's a stock where they can delve in a little bit more and go back to. If you want another example, which is a bit more nearer term than the GME one I said. But yeah, I just want to highlight that one as well because it's very important that people spot the change in structure. That's where the key lies. It's not about buying cheap stocks. It's about spotting the change in structure. And
Yeah.
there's two great examples they can go. But let me go back to your question. So it was on pattern recognition, right?
Yeah. So how you can help basically what mental models or habit help people basically build that level of pattern recognition.
Yeah, and I think I say a lot of this about the book. The whole book really, and my structural brain is like that. So it translates into the book very well. And you have to train your mind to see change as a signal, not noise. So we look at corporate behavior patterns. So insider buying, asset separation breakups, capital rotation, change in structure, the way pilot reads instruments. It's not about prediction, it's about probability over time.
Yeah.
So it's like I call something which I kind of coined the phrase really catalyst intuition. You start recognizing when a company's structure and incentives are about to shift. And that's when Alpha appears. And we've done this very well, and I've done this very well in Intel. Intel was a company bombed out, great company, just bombed out. And then if you look at my Forbes blog and if you follow that very carefully, you'll see things where I've kind of predicted that something was happening, something was changing. Then Trump stepped in, and then it was like they got a big investment, and then it was like the stock went, north. So you kind of got to see where structure can come in at that point. And like I say, catalyst intuition. That's what I call it.
Oh, I love it. So for someone that new to catalyst investing, where should they start?
I think just looking around where other people don't look. I mean, we're cluttered with noise. We're overloaded with noise. Well, you've got access to any information that you want at the touch of a button, right? You can pull up your alerts. You can look at Yahoo, Google, anything you want. It all comes to you. But what use is it if everyone's following it, right? Like you say, follow the herd. This is I'm a big believer in the 80/20 rule, and this is a classic 80/20 stuff where you should be looking at the 20% of the stuff that people don't look at. So just really in what I said before, corporate change. Something that changes fundamentally the structure of the company or the investment, and where you believe there can be some sort of upside essentially from that change.
Okay. So, do you have any practical framework that makes it easy for people to just keep that watch on those changes in companies?
Yeah, yeah, absolutely. So, I mean, set up the screens for all those terms that are in the book.
Hmm.
Insider buying, split ups, split offs, spin offs, corporate restructuring, anything weird and wonderful. Because the trouble is with people today, and it's not just about investing, is they don't want to do the work. And if you don't want to do the
Yeah.
work, then
Yes.
nothing comes in your lap to you, right? And you know that from running your own business yourself,
Yeah.
right? It's not going to come all to you, and you're going to, spend the day sunbathing, and hopefully they can it all works for you. It's hard work, and these situations take conviction, they take patience, they take discipline, and they take a process. See, people are not willing to follow a process these days. They want it now. I want a 20% return. I want a 50% return. But there's not that patience. And that's the problem with everyone. They don't have a process and they never ever, most of them I'd say, and this is a majority of investors, and they're going to hate me saying this, is they put P&L first before risk.
Oh,
Like you need to quantify, and again, this goes for not only investing in everything you do. What is your downside? How much are you prepared, or could you lose? Right? Because if I know my downside, the upside is gravy. Right? Most people are successful. You meet any person in the street, they can either say, "Well, yeah, I said Amazon was going up. I said this was going up," and they were right. But actually, what about their losses? Because they don't quantify risk first, because that's where they lose,
yeah.
right? And
Yeah.
that's the problem with a lot of people.
I know. So I love that you say patience and process. I mean, and discipline, right? You gotta be if you can't get into this without those three important components. So
It's
thank you
not.
for
It's not about prediction, you see, because
yeah,
the upside will take care of itself. Right? Most people are right. Like I
yeah,
say, it's the downside where they get wrong. It is an interesting one. I was talking to the team this morning, and they were saying, "Well, what do you think of this guy selling his stock? It's gone up, 200%." I said, "Nothing." I said, "We all sell stocks. We all sell everything when it goes up in price because our brain naturally thinks we're great and we want to take money off the table." Right? You do that in the opposite way. Suppose you're making a loss. You think, well, that's not right. It's a loss. I'm not taking a loss. I'm going to carry on, and the loss gets bigger and bigger and bigger. So essentially, all through life, you're cutting your profits cheap, and you're keeping your losses. You don't make money. So investors have that mindset because the human brain is like that mindset, and it's like, well, I don't make money. Why? You see, so if you don't have a process, it's not about prediction. It's about managing the downside risk first of all before you look at the upside.
yeah.
No.
So yeah, so that's why. So those situation that requires invest in situation that requires like you said conviction or intuition. You mentioned intuition, patience, and discipline. These are traits that we talk about constantly in leadership development in my field. So I'd like to do a parallel to that. So what parallel do you see between successful investor and successful executives?
I think, well, let me just say one thing if I say that, because this is
Yeah.
very important. Because just going back to that, if you're looking at an investment, and this goes with the herd mentality, it goes with the behavior, and I talk a lot about this in the book. You have to have an analytical edge. You need to understand that the stock could be cheap through the structural change or post the structural change, but you also need to have a behavioral edge, right? My best investments are one where it's cheap and everybody hates it. When I bought Meta at $86, right, 5 years
Yeah.
ago, it's now at 700 bucks. I don't know what it is. I still got it. Just compounds every day. They said I got messages. They said, "Jim, you're an idiot. No one uses Facebook anymore." And I said, "Well, there's five businesses within in Meta, and the sum of the parts is at least 350. So what I'm buying is the downside, is the bottom of the stock. So behavioral edge plus analytical edge. That's the key in most investments. But going back to your question, I would say in terms of leaders and CEOs, it's about managing their emotions. And again, I want to go back to the book. There's a whole chapter in there. If you don't understand anything about investing, read this chapter. It's about managing your emotions and detachment of your emotions to decision making. Right? We want to. Like I say to a lot of the students, even at ground level, I say to the students, we have a lot of interns that come through. And I say to them, all your resume says how great and good you are, how great of a team player you are, how fantastic you are. I don't care. I don't care. Show me, don't tell me is the first thing, but also I don't need to know what your feelings are, right? It's not affecting me. And if your feelings are driving your behavior, that's really bad. And I see a lot of CEOs, and we're in a stock at the moment. We have a position in Dime Brands who runs Applebee's and IHOP, and I believe the management are just driven by emotions and not structural change and decision making, which should be the focus of shareholder value. And that's why we're in the stock for change. So
Yeah.
so detachment is power. Whether it's investing, running the company, emotion will cloud your judgment. But it's very, very hard to separate your emotion from your judgment because you just get ahead of steam and you just want to do what you want to do.
Yeah. So thank you for sharing because talking about emotion, emotion detachment, emotion regulation is becoming a competitive advantage in leadership. And I talk a lot about it in my post. So, what advice would you give CEOs about managing emotion in high stakes situations?
I just think you got to step back sometimes and say, is this just me speaking because I want to be big, because I want to puff out my chest? And everyone wants to puff out their chest, right? It's like, here's an analogy I give, right? It's like come back from holiday and showing your holiday photos to someone, right? I'm like, Laura, have you seen this one on the beach? Have you seen this one of Azine? Have you seen this sunset, Nora? And you're like, yeah, yeah, yeah. It's boring. No one cares what you think, right? No one cares about you and your thing. They care what you can do for them. So when it comes to decision making, your decisions must be outcomes for people because the brain will buy outcomes.
Yeah.
And if you consistently do that as a leader, then they buy into you because they believe you. And if you're generally passionate, like I am, then they will understand what I'm saying because I'm for the good of them, and that's what they buy into you. See, that's the difference. Where someone's sitting there going, "Well, I think this and I think that," and I was like, "Well, I don't care what you think, and I don't care, and I don't agree with you." Right?
I love it. I love that you say the brain by decision. So, you've built credibility in a niche field over decades. So, what leadership principle guided you in building authority and trust over your career?
I think a couple of things. I think consistency. I think you got to be consistent. I think in anything you do, you can be consistent. And again, let's not talk about investing. Let's talk about anything. Let's talk about, I don't want to brag too much, but it's just train for Ironman, right? The hardest distance at triathlon level, right? It was the most boring thing ever to do was training, but every day was run, swim, bike for 22 weeks. 80% of that bored the hell out of me. But I knew consistency and process to get to it would get me round at the end of the day. And it did. Once you get to it and you taper and then you go for it, consistency is key. But people aren't prepared to be consistent. They want change now. They want the thing to happen now. They want it to happen yesterday. And I'm like that too, right? I want things to happen yesterday. But I know that's one of my lesser traits. So I could tell that by saying, hold on, Jim, you want it to happen yesterday, but actually it might not happen. So let's just hold that for a second. So I think consistency, but also transparency. I mean, you got
Mm,
to believe what you think and you say, right? If for any minute someone's watching you or listening to you and they don't think you believe what they say, it's not going to take anything from you, right? Everyone knows me. It's like, Jim, they might not like me, but you know what? It means what he says.
yeah.
And I don't care, right? Because I know I can help them. So you don't have to like me to do what I say and make money. And that's the key. So I think consistency and transparency, and I've never tried to be everything to everyone. You need to get your niche. You need to be the best at it, and you need to be exceptionally well at what you do.
Yeah. And these are critical influence levers. So I'm glad you're sharing them. So if you had to pick one, just one, what's one leadership habit executives should strengthen to improve their strategic thinking?
Well, that's easy for me because it's ingrained in me, and it's structure. It's thinking
Mm,
structure, not reactively. I don't react to anything, right? The market can fall 500 points today, and I'll be like, okay, what can I buy? Right? That's what I'm thinking. I'm not thinking how much money I'm losing. It's just a figure. And I've been in big portfolios where I lost millions of dollars in a day. It doesn't matter to me. It's about what is it in terms of structure? How do we approach this? And I think that if you can think structurally, and again, it comes back to emotion, right? If I give you, if you're in an investment, Nora, and you've got a big red mark on your screen today, and it says you're losing X amount of dollars, all you're thinking of that is a loss. How do I get out? How do I stop from losing money? What happens? I'm thinking the opposite. I'm thinking, how do I buy more? Has anything changed? Has anything changed with the investment? How do I capitalize on this? Right? And that's the difference. And I think once you put that through everything you do, and it's a structural. And again, it's easy for me because I'm wired, because I'm a structural man, right? You throw 20 things up in the air, I've caught them like that.
Yeah.
And I'm not boasting. I'm just saying it's not always easy for people to do that. So
Yeah.
I think that if you can think a little bit more structurally than reactively, every business has layers of hidden value. And it can be divisions, talent, assets, whatever it is, and they can be unlocked. And if you're willing to reframe the problem, then you got you're halfway there, I think. And most leaders are so focused on optics. The best ones design the structure beneath the story, and I think try to play it out.
Yeah, love it. That's why I always say like structure really helps thinking clearly and acting deliberately without being reactive. And it's a discipline that whether you're leading a fund or leading a company, that's important to have. And so this is part of always in my core conversation with executives. So thank you for bringing that in the conversation, Jim. So looking
Uh,
ahead, let's look ahead.
mm.
Markets evolve, behavior evolves. So, what shift do you see coming where catalyst thinking will become even more essential?
Well, again, sort of straightforward for me because I'm always trying to think two steps ahead of the market. I mean, it sounds
Yeah.
like, hey, great, look at him. He thinks he's better than everyone else, but it's not because I'm always trying to think what's coming next. And I think, I said this in an article I wrote on Bar Chart, and people can sign it. They're free. It's all free. But I basically talked about, catalysts and obviously the change in the market and why we're not in an AI, why we're not in a bubble, and where to find value. And I think that just brings it back to your question. We're entering a world of structural scarcity. Capital's
Mhm.
tightening, rates are normalizing, complexity is rising, and it's where catalysts matter most. And again, people come back to me and say, "Oh, he's just beating the catalyst drum again." But it's true because what do you buy in this market? We're seeing breakups of big companies at the moment. Big companies you're going to know. We just had one on Honeywell. We got one on DuPont. We got one on
Mhm.
Johnson and Johnson. We got one in Unilever, and that's addition to all the other ones. These are big companies that need to change because they're forward-looking companies that think that, hold on a second, stuff's changing. We need to change with the environment. And this is where you're going to get structural alpha. And again, go back to my Forbes blog, go back to my bar chart. I've been talking about structural alpha for weeks because it's
Yeah.
coming. And this is where to look. All right, and it'll come from changing events and changing companies and things like that. So yeah, it's structural scarcity and structural alpha, as I call it, and it's looking again where people don't look. People do focus on how do I buy Reddit, how do I buy Nvidia, how do I buy that stuff's kind of played out. It's if you want real alpha, you need to do the work and you need to look where others not looking, and you look in structural change.
Love it. So, what's one thing you hope readers will take away from Price Catalyst?
I think the edge is not about being a genius. Yeah.
I
And
love it.
and you said to me before, and I'm glad you said it to me because I wrote the book like that, is it's not like I don't need to blind you with science. I don't need to tell you how clever I am. I don't need to tell you how many numbers I know. I don't need to tell you how many metrics I know. It's about observation. The market consistently hands you opportunities. Okay. It consistently hands you opportunities. Say that again. You just have to look where others aren't. And even this year, right? Let's take back in April. There was a company, and you'll know it, Western Digital Corporation and SanDisk. SanDisk, those little things you plug in your computer, right, for the memory. They broke up, right? They broke up into two pieces. You got 250% out of those at least. You know why? Because they changed their structure, they were revalued and all that. Has anyone talked about it? No, these are big companies. So I can give countless areas and companies that have done that. So, look at what's going on in the world rather than being
Mhm.
blinded by the noise. I don't read any sort of noise that
Yeah.
comes in, right? So again, the market will give you opportunities. You just have to be ready for them, and you have to be disciplined through the
Yes.
noise, and you have to be
Yes.
ahead of the next cycle.
Yes. And I retain three things. I retain insight over noise, I retain clarity over speed, and I retain discipline over drama. So
Nice.
there are three key important I retain from myself, at least from
Mm, mm,
what I captured, not only on through our conversation, but through the book. So
okay.
Jim, it has been fantastic. Thank you so much for one, be participating to this interview, for sharing your perspective. I love your boldness. You know how bold I am.
Yeah.
I love that. Your discipline and your framework for thinking differently. And that's what we hear about. It's really helping people to think differently. So for those watching or listening, if you want to sharpen your perception, anticipate opportunities and build real decision making edge, I highly recommend that you pick up Price Catalyst. Jim, where can we people follow you or follow your insight and get your book?
Well, let me say a few things. So, and I
Yeah,
thank you for that, Nora. Thank you for the opportunity today.
yeah,
There's a couple of things. One, I have a Forbes blog, which someone at Forbes said, I think you're smarter than the average bear. Can you write for us? And I went, all right then. So, what a mistake that was. So, go to my Forbes blog. It's all free there. Jim Osman Forbes. Go to bar chart, Jim Osman again.
yeah,
I write extensively, and I just give the stuff away, right? I give what works, and I don't recommend any stocks I don't buy myself. So they can do all that, and I think that's the best port of call. Those two, and it's free. So do that. The book, incidentally, all profits, all my profits go to charity. I don't make anything out of the book. Zip.
yeah,
And my passion is to get the message out there, help students, help investors, help everyone like that. So go buy it. It's on Amazon. Go buy it. Go read a review. Don't care what you say. Just see if it's helped you or it's not helped you. Just make sure that review helps someone else.
yeah.
But yeah, use it and win. I love people winning. So yeah, that's
So, well, I will put it in the video so people can find you. We'll put also your LinkedIn profile so people can follow you because
absolutely.
I love your posts. I follow them every day. So thank you
Thank
for
you.
sharing your wisdom. I learned a lot. I can say I learned a lot from
Appreciate it.
your posts. So thanks again, Jim, and to everyone joining us. Keep thinking differently, stay curious, and lead with conviction. Until next time. Thank you, Jim.
Thank you, Nora.